2025 isn't just another year, it's a turning point. Beneath the headlines of rising inflation, political chaos, and global uncertainty, something much deeper is unfolding. This isn't just turbulence, it's transformation. Economies aren't recovering. They're resetting. Old strategies are breaking down. Long-held assumptions no longer apply. And the people who see it early? They're not panicking, they're positioning. Not with noise, but with quiet precision. They're not simply saving, they're restructuring. They're not just investing, they're repositioning. Because when the rules of the game change, only those who adapt will thrive. Everyone else? They'll be left behind, watching, wondering, and wishing they had moved sooner. In this video, we're pulling back the curtain on where smart money is going during the 2025 reset. And more importantly, how you can apply the same mindset and strategy, even if you're starting with limited capital. Let's dive in.
For you, I'd go and misbehave just so you'd notice too. Sneaking looks up and down from across the room. And damn, what a hell of a view.
The global reset nobody talks about.
Go.
What if the world isn't recovering, but resetting? Mainstream headlines may talk about falling inflation and strong job numbers, but beneath that surface lies a far more unsettling truth. We're not watching a temporary slowdown. We're witnessing a systemic transformation, a reset of how the global economy works. Governments around the world are drowning in record-breaking debt, not just the US, but Europe, China, and emerging markets alike. Interest rates have surged to levels not seen in over 20 years, choking small businesses and households. Inflation hasn't disappeared, it's simply shifted. You see it in the price of rent, in your grocery bills, in rising insurance premiums and hidden service fees. And as central banks tighten and pivot, one thing is becoming clear. They're running out of tools. This isn't just another economic cycle. It's not a dip to be bought. What we're experiencing is a financial reset. A deep shift in how value is created, how money flows, and how wealth is preserved, or lost. And the smart money sees it. While the average investor chases headlines, billionaire capital is chasing signals most people miss. They're not reacting to today's noise. They're preparing for the world after the noise fades. Because they know something most people don't. When the system changes, the old rules stop working. That's why they're repositioning, not for today, but for the structure that comes next. And if you want to stay ahead, or even just survive financially in this new era, it starts by understanding where that smart money is going, and why.
What the smart money is leaving behind.
Go.
Before we talk about where the smart money is going, we need to understand what they're walking away from. Because sometimes, knowing what not to do is even more important than knowing what to do. The first thing they're leaving behind? Overvalued growth stocks. For years, money poured into tech companies with sky-high valuations and no profits to back them up. But when interest rates rose and liquidity dried up, reality hit. The smart money is no longer chasing hype. They're exiting assets that were built on narratives, not fundamentals. Second, they're pulling back from high-risk real estate. We're talking about overheated housing markets, commercial office buildings in post-pandemic cities, and speculative developments in unstable regions. With higher borrowing costs and declining demand, many of these assets have turned from cash cows into ticking time bombs. Third, they're avoiding bad debt and weak currencies. That means stepping away from consumption-driven borrowing, credit cards, auto loans, and anything with double-digit interest rates. And it means reducing exposure to currencies facing inflation pressure or political instability. Because in a reset, paper money tied to fragile systems loses trust fast. And finally, perhaps most importantly, smart money is leaving behind short-term thinking. They're not jumping into meme stocks, chasing viral crypto tokens, or reacting emotionally to market swings. They know that real wealth isn't built in months, it's built through decades of strategic positioning. In short, they're stepping away from noise and toward clarity. Because in a world that's resetting, clinging to yesterday's winners is the fastest way to lose tomorrow.
Where the smart money is actually going.
Go.
So, if the smart money is leaving behind overhyped assets and risky debt, where are they going instead? The answer isn't as flashy as you might think. It's not about chasing the next big thing, it's about positioning for resilience, stability, and long-term value. Let's break it down. First, cash is king, but only the right kind of cash. Billionaire investors aren't just sitting on money in a regular savings account. They're moving into short-term treasury bills, high-yield money market funds, and liquid instruments that preserve value while staying flexible. This isn't about fear, it's about optionality. In times of uncertainty, the ability to move quickly is power. Second, gold and commodities are back in favor. Why? Because in every financial reset, real assets tend to outperform paper promises. Gold, silver, and essential commodities like energy and agriculture offer protection when fiat currencies lose credibility. It's not about making huge gains, it's about preserving purchasing power when inflation bites hard. Third, private equity and real ownership. Instead of chasing public stocks, many smart investors are moving into private businesses with strong cash flow. They're buying into real-world companies, boring, unsexy businesses that generate steady income. Think logistics, manufacturing, essential services, the kind of companies that don't depend on hype to survive. Fourth, geographic diversification. They're not betting everything on one country, one currency, or one system. The smart money is quietly moving capital into emerging markets, Asia, and hard asset havens around the world. They know, when one system fails, another rises. And they want a foot in both. Fifth, value over noise. While retail investors pile into trendy sectors, smart money is focused on defensive ETFs, consumer staples, and energy stocks, industries that people rely on no matter what the headlines say. It's not glamorous, but it's effective. So the big shift isn't into some secret asset class. It's into a mindset, one that prioritizes stability, optionality, and long-term survival over hype and quick wins.
What you can learn from their moves.
Go.
At this point, you might be thinking, sure, that all sounds great, but I'm not a billionaire. I don't have millions to reposition. But here's the truth. You don't need millions. You just need the right principles, and the right mindset. Because while the amounts may be different, the strategy is the same. First, hold cash strategically. Don't just park your money in a checking account and call it a day. Look for high-yield savings, short-term bonds, or money market funds that give you both liquidity and protection. The goal? Stay flexible while preserving value. Second, avoid lifestyle leverage. Smart money isn't spending to impress. They're cutting unnecessary debt, avoiding impulse upgrades, and living well below their means. Because in a financial reset, leverage is a trap, and simplicity is strength. Third, invest with long-term conviction. Forget about chasing quick wins or trending assets. Instead, build a portfolio based on strong fundamentals, assets that will outlast the noise, not just ride the wave. Even if it's small, consistency beats size over time. And above all else, the biggest difference isn't capital. It's mindset. Billionaires don't think in days or weeks. They think in decades. They don't follow headlines. They follow principles. And that's something you can do, starting right now. Because in the end, building wealth isn't about having more money. It's about thinking smarter with what you already have.
Closing insight.
Go.
So let's take a step back. What separates smart investors from the rest isn't luck. It's not timing. And it's not how much money they started with. It's strategy. Every major investor you admire, whether they built fortunes in real estate, equities, or private businesses, they all had a game plan. They didn't hope their way to wealth. They positioned. They adapted. And they moved before the crowd. And in 2025, that difference will become even more clear. The winners won't be the ones with the most money. They'll be the ones who think smart, move quiet, and act early. before the rest of the world catches on. So now, it's your turn to think like smart money. Ask yourself, where do you think smart money is moving next? And if you had $10,000 today, how would you protect it and grow it in a time like this? Let me know in the comments. I read every one. And if you found this video valuable, don't forget to like, subscribe, and hit the bell so you don't miss what's coming next. Smart Financials, helping you move like smart money.
Go and misbehave just so you'd notice too. Sneaking looks up and down from across the room. Damn, what a hell of a view. I feel good, you look great. I like you, I can't wait. A first time, a first date. You're so fine, I'm so late. You sip wine, I drink.